Hi everyone, welcome to MC's Accountant Shares. For this day, we are going to continue our discussions for rules of debit and credit, and this time it will be on the applications of the rules. So mind you guys that I've already released the other material which talks about the rules of debit and credit, and then that was an extensive digging into the rules. So hopefully you visited that, but then allow me to show you some pictures. So these are the rules of debit and credit. Make sure to take note that the normal balance is the side in which that account will increase, and the opposite side is the side in which it will decrease. So increase side is called the normal balance as a review, and then the opposite side is the decrease. These are the three accounts found on the basic accounting equation, which is assets equal liabilities plus stockholders' equity. So this is again the equity of a corporation. And you can notice that assets would increase on the debit side. Therefore, this is the normal balance, while liabilities and equity would increase on the credit side. Therefore, the normal balances are credits. All right, so that's a review. And then we have here another picture. So this shows that on the debit side, assets, expenses would increase. And then on the credit side, liabilities, income, and equity or capital. By the way, another term for income is revenue would increase. And then what is lacking here is drawing, in which drawing will increase on the debit side. And that's why, as what I said, that overall, we can say that there are three accounts that would increase on the debit side, and these are assets, drawings, and expenses. Another term for drawings would be withdrawal or personnel, as I explained last time. And then also there are three accounts that would increase on the credit side. So you have capital or equity, revenue or income, and you have your liability. Okay, so to make it easy, again, I repeat, you have to take note at least three accounts, and then that would increase on the debit side. For example, that's what I did, asset, drawing, and expenses. And then this will enable me to take note also that the other three accounts will increase on the credit side. Okay, so that's it for the background, I would say, about the rules of debit and credit. Now, if you can hear some noise, guys, please disregard again, because I'm somehow in a very industrialized place where manufacturing is on its peak. So just disregard. Hopefully you can still hear my voice. Now, this is an illustration for a service concern wherein there are transactions shown, and we are going to apply the rules of debit and credit. So here are certain four words given. So certain accounts are also represented for assets down to expenses. Okay, so this also involves, though, that we already know what the account titles are. So account titles are those specific groupings of similar accounts that are talking about same substance, economic substance, I would say, in accounting. And then these particular accounts are already set, although we can make account titles depending on the company or industry to which it belongs to. So the it is the business, by the way. So it's going to be normally given for certain small businesses like sole proprietorship, but as we go along our journey in accounting, as we go higher in the accounting journey, we will know that there are more account titles that we will encounter. Okay, so for transaction number one, we have here the owner, Mr. Pozon CPA, opened a bank account with Rizal Commercial Banking Corporation in the amount of 100,000 pesos to start with his accounting practice. Okay, so whenever we analyze, guys, you always think of debit and credit. So remember, debit means the value received, or that's also known as left, while credit is value parted with, or the right side. So in this case, we also analyze, by the way, when we analyze transactions, we analyze at the point of view of the business, not of the owner. So do not be confused. Remember, we said that accounting can be applied by anybody, even us, persons, or human beings. Yes, that is true. But the accounting that we discussed here is the accounting that is to be used by businesses. So that is why when we analyze, we're always at the point of view of the business. So in this case, when Mr. Pozon opened a bank account for the business, therefore the business received money. And that's why the debit is cash in bank and the credit is the capital for the business. Now, when I analyzed though, when I was in undergrad, this is how I make things easier. I think of the side that is easy for me to understand, and I put the other account on the opposite side. So example, in this particular situation, the transaction is that the owner opened a bank account for the start of the practice. Therefore, the business received its money that is in the bank. And that's why it's known cash in bank. Because if it is in the hands of the business or on the hands of the business, that's going to be called cash in hand. And I will pair that with a capital account. So when we debit assets or assets, that will increase such. And if we credit owner's equity, that will also increase such. Okay, so hopefully that is correct. We'll just disregard the T accounts for now. This is not yet the T accounts portion. Okay, here, transaction number two. When we see the word bought, we assume that the company bought office supplies on account for 3,000. As what I've said a lot of times, that although the business is not really a person, but it is an artificial person, the law recognizes it as a person. Therefore, it can also enter into transactions, but it is in behalf, of course, of certain persons, natural. So the natural persons are the human beings, because the businesses do not have mouths to talk. That's why there are representatives to do the transactions for such or them. But then we assume that the business bought office supplies on account. So in that case, what is received by the business and what is let go or parted with by the business? So since the company bought office supplies, therefore, we will have to debit the office supplies inventory of 3,000. And we have to let go, or we have to recognize a liability of 3,000 pesos, so equal on both sides. And that's why, for our analysis, that's it. For the rules of debit and credit, therefore, the debit is increase in asset and credit increase in liability. Take note that if we say analysis, we talk about the account to be debited and the account to be credited. But if we say the rule, we talk about the effects on the accounting elements. So by the way, as what I've said a while ago, on the summary that there are 6 account titles overall. These are called accounting elements. So accounting elements, also known as accounting values, are those items or big groups of accounts having similar nature in the financial statement. So there are 6 of them. For some, they are going to have like 5 because drawings will be part of capital or equity. Okay, so by the way, this is not arranged properly. So supposedly the arrangement is assets, liabilities, equity, drawings, income, and expenses. So we will see that anyway in our other sessions. Anyhow, the point is that those are accounting elements. Under accounting elements are the account titles. So in this case, the accounting element is asset and the account title is office supplies inventory. In this case also, the accounting element is liability and the account title is accounts payable. So hopefully guys, you're also taking down notes there just in case you're able to hear the things that I'm saying. Okay, that's transaction number 2. Next, transaction number 3. The business received cash of 10,000 for auditing services rendered by or yeah, by the business to the clients. Okay. So what is received? What is the value debited by the business? The business received cash, therefore it's cash in bank. And then what is being let go or what is the partner? It's the auditing services rendered. So in other words, there would be an income. Income will be earned or generated or recognized as used in accounting when we have 2 situations. If the company sells products, so when the products are sold, or goods, when the goods are sold, because in marketing subjects or other management subjects, if we say products, we mean either goods and services. Goods are the tangible products, services are the intangible products. So service, meaning this is service concerned business. So this is a service type of product which is intangible. Now, when services are rendered, therefore income is earned. That's why you credited professional income. For certain books, you might be using service income, which is okay, but we can also be specific in our account titles. That's why when we analyze normally and when we have journalizing in the next chapter later on, we will get to know that in recording transactions, we have to look the given list of account titles. That is called chart of accounts. So chart of accounts will be discussed also exhaustively. But then what is clear is that we are going to make use of what is given in the problem. So rule is debit. When we debit asset, okay, it will increase. And when we credit income, it will also increase. All right. So that's it. Another one is transaction number 4. Mr. Bartolome Pozon withdraw cash of 5,000 pesos from his business. So when we analyze again, we think on the side of the business. When the owner withdraw money from the business, what was the amount received by the business? It's the drawing, it's the withdrawal of the owner. Therefore, we debit B Puzon, comma, drawing. So this is how you are going to, for a while, so this is how you are going to place the account title for drawing. So it would be, we are going to debit the drawing account and we are going to credit what has been withdrawn from the business. Okay, so cash in bank because it is from the bank, probably. Okay, so debit increase in drawing, it's a debit, and it's credit increase in asset. Take note that there's a note here, a decrease in owner's equity. This is because drawing is a minus to equity. When we invest to the business, it's going to increase our capital. But when we withdraw money from the business, then that's going to be a minus to our capitalization. That's why it's going to be a decrease in owner's equity. Okay, so that's for transaction number 4. Next is transaction number 5. Paid salaries to audit staff of 4,000 pesos. Now, we assume again that the business paid salaries to audit staff of 4,000. And that's why we are going to debit salaries expense and credit what did we use to pay? What do we have to let go to pay salaries? We credit cash in bank. And that's why the debit is increase in expense and credit decrease in asset. All right. So this is how it is being administered or done. Then debit expense is increase. When we credit asset that is cash and bank, it will decrease. Again, disregard the T accounts. Okay. Another one is when the business paid, the accounts payable on supplies 1,000. When there is payment, what is being let go? What is being parted with? I suppose you should have answered cash and bank in my question, right? So I cannot expect you to answer for my question, but for sure you should have answered cash and bank. So when we pay, we let go of money, and that is cash and bank. What is to be received? What was received? Our liability, because we have to close that, we have to recognize that so that we can pay it. Okay, that's the explanation. Debit of liability is decrease to it, and if we credit asset, it will decrease it. All right. Okay, so that's it for the samples. We only have like 6 transactions. There can be more on the applications, but hopefully you'll be able to recall the concept. So as a close, I would just suggest for you to be able to remember everything, go back to the summary, know which accounts that would have normal balances on either debit or credit. We only have 2 sides. On the analysis, we take note of the account title that is appropriate. And for the rule, we have to know the effect. The effect would either be increase or decrease. Increase on the normal balance, decrease on the increase side or the opposite side. All right? So that's it, guys, for our discussions for today. And hopefully you learned something. And I'll see you next time to our sessions. Hopefully you will like this video, you will subscribe to this channel, and share to whoever people you think need more explanations about accounting, because oftentimes we need someone or somebody better than us, or if not, older than us, who can provide better explanations to certain things. And with that, I'll see you next time again. Bye.